Good morning. Red meat continues to be red hot in 2012. Cash cattle and futures markets are trading at all-time records, and the blitz comes off the heels of shrinking herd sizes and rising global demand for U.S. beef. New record prices lead our Beef Today report. Live cattle futures rolled to another new record Wednesday, a feat that's been accomplished nearly a dozen times since the first of the year. February contracts neared $129.40, up nearly 50 cents over Tuesday's close. Cash cattle markets are on a similar pace, trading last week just shy of the $1.30 per pound mark. Helping underpin those numbers are strong box beef and retail prices. It's all a result of severe drought and fewer cattle in North America.
It's not just the United States. That drought didn't stop at the border. Northern Mexico has been extremely dry. They've lost a couple 100,000 cows. And Canada, their cow herd is down about 25% in the last 10 years, simply because there's a lot of more cropland. Because the price of commodities has gone higher, they're plowing up grass and putting in crops. So if you look at the three countries that make up North America, we're down substantially in our numbers.
Donald is correct. Canadian beef herds continue to shrink as well. The most recent survey of cattle operations in the country shows the number of beef cows is now 20% smaller than it was in 2005. The numbers come from Statistics Canada. As of January 1st, beef cow numbers were 1% below 2011 totals, coming in at just over 5 million head. The calf crop was nearly 4% smaller. But producers there are trying to rebuild stocks. Both heifer retention and beef cow replacements are up several percentage points. Canadians also shipped 7,500 breeding females into the U.S. in 2011. In the southern plains, where cattlemen hope to recover from a year of record drought, the mild winter has brought an early spring. Wheat pastures in many parts of Oklahoma have already started maturing to first hollow stem. That means in order to harvest the crop, many cattle will need to find forage elsewhere, but pastures have been good while they lasted.
This country and this business of using wheat for pasture, it never ceases to amaze me. Starting in October, we thought we had very limited prospects for wheat pasture, but ever since that time, we have had very good conditions. We've had moisture, we've had good weather. The wheat has grown. The cattle that we have out, even though the total number of cattle out is less than normal, the cattle that we've had out have done very well. Most producers are reporting very good gains on the cattle. We have had some bloat problems and a little bit of death loss problems, but in general, it's been a remarkably good year given where we started on the wheat pasture situation.
Peel thinks much of the winter wheat crop will be used simply for forage and to feed cattle rather than be cut for grain. News organizations out of Asia are reporting an outbreak of foot and mouth disease in China. It appears a highly contagious disease was found in 4 head of cattle on a farm in the northwestern part of the country. According to the Ministry of Agriculture, the cattle and 22 others were culled in an effort to keep the virus from spreading. A 6-figure reward is now being offered to help find who firebombed more than a dozen livestock tractor trailers in Fresno County, California. The trucks are owned by Harris Ranch, one of the biggest ranching companies on the West Coast. The company is offering a $100,000 reward for the arrest and conviction of the firebombers. The Fresno County Sheriff's Office says the trucks were intentionally set on fire in early January. Investigators with the Ag Crime Task Force say they're pursuing all leads. Next Thursday, an insurance fund created to help protect farmers from similar economic meltdowns like the MF Global bankruptcy is supposed to be active. The CME Group announced the fund earlier this month. The $100 million fund is intended to provide protection to customers who hedge their business in CME Group futures markets. Ag Day regional reporter Michelle Look looks at the continuing fallout of the MF Global fiasco.
So going back and finalizing that.
The commodity markets are still trying to heal from the black eye left after the MF Global bankruptcy and the loss of more than $1.6 billion of customer segregated funds.
You think of those people that got hurt in that, they were using that to manage their risk. And it turns out that they lost that money that they thought was helping to manage their risk.
The loss of segregated funds was unprecedented and triggered congressional hearings in both the House and Senate Ag committees.
We are really watching this investigation very closely because we want to know what happened. So far, all of the hearings that we've had in Washington, D.C. really haven't told us much.
Government officials say they have finally found the lost funds but can't disclose the location. The case is now in federal bankruptcy court, but some producers may never get all their money back.
And even though this money has been located, if we are able to get more of it returned, right now we're at about 72% of the money being returned. If we get more, it could be years before that happens because it's all tied to the ongoing investigation.
As a result, customer confidence in the markets has eroded for many farmers and ranchers.
Producers, frankly, lost a lot of faith in the system because of what happened. Something happened that none of us thought would happen, could happen, that it was being overseen by the government, so to speak. The regulators were watching this close enough.
In an attempt to shore up confidence in the market system, the CME Group is establishing a fund to protect farmers and ranchers from losses like the MF Global bankruptcy in the future. The CME is proposing the fund contain $100 million. The big question is whether that amount of bonding is sufficient.
When you look at MF Global, no, that's not adequate. But the fact is, I think CME is showing some good faith that they want to maintain the confidence in their risk management tools. They want to make sure their investors know that they're committed to keeping an eye on things.
And I think there needs to be some kind of insurance or something that says that these trading companies cannot use our money that's in our margin accounts.
That insurance is also needed because it's more than just customer confidence that must be rebuilt.
I think most of us in agriculture use a line of credit to manage our risk. And if my banker is concerned that when I use that money to do that and that's not secure, there's a lot of red flags go up.
However, cattlemen say that doesn't mean they're calling on Congress or the CFTC to impose additional regulations.
If they're not going to follow the laws that we have now, does more laws help? So if laws were violated, then we have to look into that, and maybe it's more of an enforcement issue.
I'm Michelle Rook reporting for Ag Day.